Hello, and welcome to the Money and Banking Law Podcast with Joe Silvia, brought to you by Duane Morris, an international law firm with roughly 30 offices and 1,000 lawyers all over the world. I'm your host, Joe Silvia. I'm a former Federal Reserve lawyer who represents banks, fintechs, and financial services clients on M&A, payments, and regulatory matters at Duane Morris. I'm also a core member of our banking, fintech, and digital assets and blockchain practices. Now, while we can't provide legal, financial, investment, or tax advice on the podcast, our goal for the Money and Banking Law podcast is to inform and educate our clients and friends on both the fundamental concepts and structure of the banking ecosystem, as well as critical developments in the law and regulation of money and banking. Thanks for joining us today. As always, if you have any questions from any of our podcast episodes, please reach out to me at jsylvia@duanemorris.com. On this episode, we're talking to Scott Shay, founder of Next. Joining us today is Scott Shay. He's co-founder of Next, kind of a new generation of banking services and payments. And so, Scott, thank you for joining. Thanks for being with us. I'm really excited about the episode because I've seen you on other episodes with other podcasts. I've talked to you a bit offline, and you've got a lot of really, really interesting stuff going on over there. You've got a really interesting background, which I'm going to ask you about in a minute. But before we do that, why don't we just do like a quick intro of what you're doing now?
Sure. So first of all, Joe, it's a pleasure to see you and a pleasure to be on your podcast. Thank you for having me.
Of
I'm
course.
working on something. So as you know, because we've talked about this, this is the fourth bank I've started. First one being Bank United of Texas. Then I was a co-founder of Merrick Bank, and then Signature Bank, which I'm best known for to date. But I really expect that next N3XT will be the very best of all because what we're doing is we've created the only full reserve US dollar bank, period. Um, and you can't go through an experience or experiences like I have without giving it a lot of thought. And I think creating a bank that is where we make no loans, where every dollar sits on um, in sits in custody, in where we have safekeeping receipts of direct U.S. short treasuries, no repo, no nothing, the safest thing in the world. So that on one side we have U.S. dollar deposits, on the other side we have direct obligations of the printer of U.S. dollars. I think that's a new concept of banking. There's
Yeah.
no fractional banking here anywhere to be seen.
Very different concept. And I'm interested to get into that a little bit more in a minute here. So you mentioned before you have founded now four banks or co-founded four banks. Give us a bit more juice on your background because obviously, you know, you mentioned that you were are best known for, at least at this point, Signature Bank. But I'm also really familiar with Merrick Bank, and now I'm become more and more familiar with Next. So tell us a little bit about the evolution of your career in banking, and then also tell us about Signet.
So my start in banking, I founded Bank United of Texas with Lou Ranieri, who was my longtime partner and still one of my dearest and closest friends. Um, and that was a whole different world. That was for those of your listeners and viewers of a certain age. That came emerged out of the Texas savings and loan crisis, which is now ancient history. But at the time, you had essentially the entire Texas banking market that had negative net worth, but was still operating because they had plenty of deposits, they had plenty of liquidity. So it was a very strange world, and we bought one of the banks. We bought it. It was called United Savings Association of Texas, and then we turned that in. It was about $1.5 billion when we took it over, and we turned it into a $20 billion regional bank. that was extremely healthy. And like many banks of that vintage, today it's part of JP Morgan and Chase. It's sort of like, got gobbled up and was extremely successful, very helpful bank for the Texas economy. Um, and then I was involved in starting Merrick Bank with partners Don Berman and Bob Pero and
Okay.
David Watson. Great people. It's all about partners, by the way. So, and I had great partners there, and they really had a vision of a creating a really different and efficient credit card bank that would be a merchant acquirer that would also issue non-prime cards, etc. And that bank
Mhm.
still exists. And around the same time, so I was on the holding company of that bank board and not the bank itself because at the same time, or virtually the same time, I was involved in the startup of Signature Bank with Joe DiPaolo and John Tamberlane.
Okay.
And that was an idea that um, which I had. I mean, in that sense, I had that there was an opportunity to start a really good regional bank in New York because the big banks were focused heavily on mass market retail and on the large corporations, and middle market banking had really suffered in New York. The old names, Chemical, Manny Hanny, there were a whole bunch of, EAB, Trust Company of Westchester, et cetera. They all, were merged away, and there was indeed a big opportunity. And we grew Signature Bank from nothing. It never made an acquisition to a $110 billion bank.
Hmm.
Um, and
Wow.
became also a huge innovator. And we'll probably get into this because in
Yeah.
2013, I started my crypto journey.
That's fascinating. Yeah, I obviously very familiar with Signature Bank and what happened in 2023. And I'm sure much of our audience is also familiar with that. So I don't want to relive that history.
Well, I will
I'd,
say this, and
yeah.
people believe they're familiar, but what happened was just a different reality than what was, sort of propagated at the time. I mean, and I've, publicly said this and testified to it. Taking Signature was wrong, unnecessary, unjust. Should have just opened the next morning.
Yeah. And
Other than it was a
I've,
crypto, other than crypto, and unsafe, unsound, and people were, in the government running around, and just didn't like. There was a time when I don't think I'm giving away any secrets. There was a time when the government did not like crypto, and
yeah, I think that was
seized a
Operation
lot of
Choke Point 2.0, right?
with us, it was really a complete choke. It wasn't a choke point. It was a complete suffocation and murder.
Oh man, yeah. I know enough to be dangerous around the particulars with the banks that failed in 2023, and um,
Well, again, we didn't fail. I'm
it's
not even going to live with the word. We were
you
killed.
were
We were
taken out.
murdered. Yeah, we were taken
Yeah,
out. Didn't
yeah.
fail.
So moving on from Signature, um, when did you start next?
So signature was taken in March of 2023, and by June 1st of 2023, I started next with Jeffrey Wallace, who we began just as soon as we could.
Hmm.
And then um, Aurel Bonnell and Kyle O'Donnell joined and began. The four of us became the founders of Next. And look, I had learned a lot. You don't go through a situation like what happened to Signature without learning if you're paying any attention. I mean, it's a painful lesson. Don't get me wrong. If I took my shirt off, you'd see scars. Um, but um, I learned that, if you have the whole reason why Choke Point 1.0 and 2.0 can work is because we live in a fractional banking world
Hmm.
where the regulator on any day, if they decide, could really crush, virtually any bank in the United States if they really wanted to.
Yeah.
If they had the will, if they, it's just a question of they can, do they want to?
Right.
And I thought there was a real opportunity to do two things. Number one, Signet was an enormously successful product. There was clearly demand for 24 by 7 banking that's real, that's not fake 24 by 7 banking. And and for those of your listeners who are enough of who are bank nerds like me, they know exactly what I mean.
Yep.
Debits and it looks like it's 24 by 7, except it's all debits and credits down, to the center of the earth. And then, um, and I knew that um, there was really a call for having doing something new. I mean, you know how fractional banking started, right? Which it was when it started more or less in Venice. Before then, there was no such thing as nobody thought fractional banking like was a thing. But
Right.
in the when Venice was a big merchant market, some of the bankers came up with this idea that you know what, um, these people have deposited money with us and they're gold, but they're out at sea, and we know they're not going to get back for at least 6 months. Maybe if we lend it out, that we can make some money, and they won't know the better.
Right.
Well, um, today things, everybody sort of knows what's going on. So there's an FDIC, there's a lenders of last resort, et cetera, in the world. But the idea is that you, me, and the three other people deposit $10. We each think we've got $10 in the bank, but in reality, 40 of that 50 is lent out to your law firm or to SpaceX or to on 30-year mortgages. It's not really there.
Right. That's absolutely right. And so, I wanted to go back real quick. Tell us a little bit about Signet.
Yeah. So Signet was my idea. Basically, it was the first 24 by 7 blockchain enabled money transfer system. So we created essentially demand deposit accounts that were governed by the blockchain. And again, as your listeners know more than most banks use one of the major um, core service providers, like Fiserv or FIS, Jack Henry. There's a few of
Yep.
them, and we created our own blockchain enabled sort of parallel system so that we were actually allowing folks to transfer money 24 by 7 on our books. The problem was we still had to do batch to the other
Mm.
system. It's sort of like stapling paper to cardboard. It worked, but it doesn't work perfect. It's not elegant.
Yeah.
Um, on the other hand, it was so much better than what anybody else was doing that and the crypto world loved it because if you go back to 2018, people would sell, Bitcoin to someone in Japan, and if it was Friday night at 7, they'd get the money maybe Wednesday of Tuesday, Wednesday the following week. By the time especially if there was a holiday between Swift and Nostro, Vostro, and
Yep.
the banking holidays, and I just, we ended up really enabling the crypto market in that now you could sell Bitcoin at 7 p.m. and at 7 p.m. and 22 seconds, you'd have your money and you could pivot to something else entirely.
Yeah.
And this grew by the end of 20. So in the first days of, um, I made a point of having this inaugurated on January 1st, 12:01 a.m. 2019, just to make the point. And we made sure there were trades. We pre-planned some trades. But the first months people were looking at this thing was like handing an iPhone to somebody in 1975. Like they didn't know what to do with it. But once they got to know what to do it, by the end of 2022, it had cleared $1 trillion.
Wow.
Um, and, that's not bad for a little regional bank. And the thing that really, really excited me, and this is why I'm so excited about what we can do at Next as well, is that what nobody knew, not nobody knew, few people paid any attention to, was that half of our tickets were actually not crypto any longer. They were shipping and logistics.
Hmm.
Um, Now, maybe it was only 10% of the volume, but it was um, it was really creating a real world use. If I ship you, I don't know, $1 million of those Believe posters behind you. I'm a Ted Lasso fan too. And one of us is going to either have to wait for, we're going to either I'm going to take the risk of shipping to you without knowing I'm going to get paid. Maybe, likely you'll pay me.
Right.
99% you'll pay me, but not 1%, maybe not. Or we're going to have to go get a letter of credit. Well, what we can do now is essentially create smart contracts that are totally where the money and the Believe posters can change hands at 3 a.m. whether it's 3 a.m. in Chicago or London.
Right. That's uh, fascinating, and one of the areas that we have folks doing a lot of work in, and trying to make things faster, cheaper, better, stronger. And it kind of converges around blockchain technology and payment systems and so forth. But what what about what you're building and what you've built at Next? What are we doing at Next? Because I've been lucky enough to learn about it and to hear from you directly offline. But tell our listeners a little bit more about Next and this kind of new full reserve banking complex run on blockchain. Tell us a little bit more about this.
Yep. So starting the good thing about starting a bank from scratch, which we didn't at Bank United, but and we used a previous system. But the good thing and Signature we really started by using an existing system
Mm-hmm.
was you can just start with a whiteboard. Start with whatever you want, totally blank slate. And so most banks use one of the systems I talked about, for Fidelity or Fiserv, FIS or Jack Henry or one of those, and they're good systems, but they were built, they're basically built on systems from the 80s. We started with a blockchain. That's our core operating system is a blockchain, which we're also the only bank that has that, which means we're much more flexible than the typical bank. And that enabled us to build essentially what was Signet, to build a 24 by 7 system directly into our core. So, unlike stapling paper to cardboard, here it's just one seamless system. And so, if you transfer money to me at 3 a.m., you had it at 2:59 at 3 a.m. You no longer have it. There's no debits and credits. It actually sort of fits what Satoshi's vision was,
Mm-hmm.
which was you move something immutably. It's not a promise to pay, which is what fractional banking inherently is, maybe with backups, maybe with insurance, maybe with, you know, perceived good guys in the background to make it all work. But you don't have to trust anything. Your money has moved. Your US dollars has moved. And that's a tremendous advance because the money is all there. So, unlike a bank that lends money, we literally have nothing from cup to lip between the US dollar deposits and the direct obligation of the only printer in the world of US dollars. There's nothing in the middle. We don't borrow any money from anybody. And that enables us to do all sorts of things. So if you're transferring money at 3 a.m., we can create a great delivery versus payment contract for you. You actually created it self-service, and You could put five different conditions on the payment of those belief posters. They're inspected. The bill of lading looks this, certificate of authenticity, whatever you want. Once
Hmm.
they're all fulfilled, the money and the uh, ownership change hands immediately and immutably. Um, And what I'm really excited about is that we can have people in all different parts of the world, and we already do. U.S. is obviously by far our biggest place of
Hmm.
clients, but we are definitely adding clients at a nice pace in Europe and in LATAM because cross-border payments, you again go back to that Japan scenario where you have to go through Nostro, Vostro accounts, different banks. It's complicated. It takes
Hmm.
days. You can pay your suppliers or you can pay your counterparties immediately across these borders, and that is really people love it. I mean, I don't. It's like one of those things that people really love and
Yeah.
they don't have to do a stable coin. You that was one of the topics you were saying we're going to touch upon. But what I'm really passionate about is we're not creating another stable coin. I mean, every if you check the news, every week someone's created another wonderful stablecoin consortium.
Yep.
And what that says to me again is that there's a lot of handoffs. There's a lot of, they call it the stablecoin sandwich. Sometimes you have multiple stablecoin sandwiches passing from place to place. By the way, people, you view that as a compliment. I view that as just unnecessary complexity. Here, you never have to go to trading into different receipts for a dollar, each with different pegs, each with complicated movements and bridges from chain to chain, which is where the bad stuff happens. You
Hmm.
actually um, just are always transacting in a US dollar world, but we brought, and this again goes to what you'd wanted to talk about, which is what I've always aspired to do is not, and when you is not to convince the stablecoin and the crypto world that they ought to become like the banks and ought to, integrate with the banks and essentially take this wonderful cell phone and plug a wire into it because that's somehow going to make it better, but rather take the banking world and move it at crypto speed. I think that's where the real specialness is from. And that's why Next was created because, frankly, nobody's doing that. They're all doing
Yeah.
these complex, workarounds of the problems. We're saying, not to mix my metaphors, but we're the clean protein. There's nothing there's no need to like go through various states. So I'm like, look, I'm one of those folks that's extremely enthusiastic about these sorts of things because I think we can make life better for people. I think we can make
Yeah.
life cheaper for people and and make life, better for the people on both sides of the transactions and not necessarily for the spreads in the middle.
Absolutely. So, you mentioned stablecoin a little bit. What's your perspective on stablecoins versus tokenized deposits? That's been heavily kind of explained and walked through in news and media outlets, but it's sometimes different for folks that are actually interacting with blockchain, with tokenized deposits, stablecoin, and stuff. They're actually in the system. They sometimes have different perspectives. I'm wondering what your thoughts are on that.
Well, I think I think to a certain degree, and this is part of the issue, is that it's like saying, what do you think of bonds? Well, there's corporate bonds and government bonds and municipal bonds and junk bonds and a whole bunch of different kind of bonds. And my take is that it's going to depend. So first, a Genius Act compliant stablecoin is very different than a stablecoin where you're not so sure what backs it.
Right. Right.
And for sure, very different than a stablecoin that's a Terra Luna,
Yeah.
where it's backed by where it's algorithm based, right?
Yep.
Totally different worlds.
Yep.
So if you have a Genius Act versus, a stablecoin that is backed where you hope by treasuries, but maybe by some other stuff too. That's different than a stablecoin that's entirely backed by treasuries. But what there in a stablecoin, what you are transacting with is essentially a whole bunch of money is put into a central place, and then you are transacting with receipts for a piece of that. So you can think of a stablecoin in one of two ways, either as a share of a money market fund where you don't get interest, or as a receipt for a pile of money put into a central depot, and it's valid. I mean, if you show up with that
Right.
receipt, it's got value. That's not a denigration by any measure, but that is a different order than a deposit backed by a full reserve. Because again, on the one side, we only have deposits that are US deposits. They never leave that. They never go into a receipt. They're never thrown into a third place. And on the other side, we only have the printer of money. We only have US treasuries. Where I think people get confused is that with tokenized deposits that are done by fractional banks, I actually think that in credit quality, when you move up with a fractional bank deposit, you move up in credit quality to a stable coin, and then I think you move up um, a quantum leap further into a dollar deposit in a U.S. account. That's a deposit token of a full reserve bank like next. I think that's at a much higher level. So I think
Yeah.
there's three levels. If you gave me a choice and you said pre next, you only had a choice of what's safer. Well, a stablecoin safer, which is why the banks are were so concerned about the Genius Act and
Yeah.
limiting its utilization. Otherwise, they wouldn't have an opinion, because it is superior to a deposit of a DDA. It's certainly from a credit perspective, but I think bringing that full functionality of a deposit, I'm sorry, bringing the full functionality of a stable
Yep.
coin
Yep.
utilization to a deposit token, I think that we're just created. That's why I'm so excited about this, because I think we created something new under the sun.
Yeah, that's really fascinating. So when when and if you talk to traditional finance, TradFi, what what do you think they should be taking away from what you're doing at Next?
So first of all, as you may or may not know, I was for a while vice chairman of the Mid-Sized Bank Coalition of America some years ago,
Okay.
and I actually did speak to, like, there was one conference we had to call or meeting or video. I think I don't know at this point. It was during the days of COVID, so it wasn't
Mm,
live. They were like maybe
yeah.
to see, and I said we as mid-sized bankers, it's time to get really into this agenda, because I think I didn't say it this way, but I think if the mid-sized banks don't, they're going to be just, I don't know what's going to happen to them versus the big banks, because the big banks get it.
Hmm.
The
Yeah.
big banks, you just show up at any industry crypto event and you can see the big banks are all over the place.
Mm,
Um, and the clearinghouse banks will issue clearly something. I think the mid-sized banks, um, um, need to understand that this is a five-alarm fire.
yeah.
Because if they
Yeah.
don't, and their competitors are frankly not us. That's why I'm so, I mean, I know a lot of people who are mid-sized bank, folks, I'm still, I'm, friendly with folks, and the people who they should be petrified about are the big banks who are, they've taken huge deposit share from the mid-sized banks. They force them to basically use IntraFi or Cedars or one of the other reciprocal deposit
Yeah.
entities, which is just a pure deadweight loss cost. Um, and I think the big banks view the mid-sized banks is, mostly being on the chopping block. Their
Hmm.
risk is not crypto at this point. Their risk is the big banks.
Interesting. Yeah, when we talk to traditional financial institutions, um, certainly the community banks, but really the mid-sized banks even. Um, we start talking a little bit about blockchain or digital assets or anything related to that, and it's the constant refrain that we hear is, well, that's just a way to launder money. I don't want to do it. I don't want to get into it. And I appreciate the perspective, although I don't agree with it. I think it's, whether you believe in digital assets or blockchain or anything else, I think like what you're showing us and what we're learning from others, and including the big banks, is that the technology has changed. The expectations of customers, both corporate and retail, are changing, and so the risk of just saying, "Oh, it's just another way to launder money," is that you get left behind, which is, I think, part of what you're identifying for those mid-sized banks is that you have to pay attention to this. You have to learn what's going on, and you have to engage.
So, that's a really so first of all, I agree. You have to engage. Um, you have to engage because the onboarding process can be identical.
Mm-hmm.
Um, we onboard companies. They basically have to comply with bank level U.S. banking due diligence. And if
Yep.
they are required to, we do EDD.
Mm-hmm.
Um, and we do all the stuff that like a compliance department person would like totally identify with. Um,
Right.
so to just say that it's out there um, is, I think that could get people into being anesthetized into having some big issues. I'm not going to go
Yep.
further than that.
Yeah. No, I agree. I agree. So, we've had some exciting news recently for you. What's next for Next? What's in the future?
Yes.
What's in the cards?
So we're in a way, this we've buried the lead, um, which is we are working very hard to allow, and this actually gets to your last question in a way, to allow non-account holders. So when you onboard and you get the full benefit of our services, we do bank level onboarding, and I don't need to tell your listeners what bank level onboarding is, and we reject a remarkable percentage of the people who apply. Um, and they have to be prepared to do that. But what we'd like to do, because we're really trying to get stablecoin functionality
Hmm.
into the real world, is we've created an opportunity for non-account holders to receive next digital dollars by virtue
Okay.
of an allow list. So the allow list means if you want to send it, let's say I'm an account holder, I'm a business, we're business to business right now, but I'm an account holder. I passed my KYC on KYB. I want to send you money, your law firm money, but you're not an account holder. Well, you can, I can nominate your wallet to be an allow list wallet where we do due
Okay.
diligence on the wallet. We're going to make sure you're not a sanctioned person. We're going to see who you really transact with. And the thing I like to say is if I don't know that you're Joe Silvia, but if you hand me your credit card account, your credit card statements, and the people you transact with, I can know who you're dealing with. And I can,
Right.
know if you're transacting with somebody who's untoward or people that are untoward. So we do that work and then either allow list you or not allow list you. And if you're allow listed, I can send you next digital dollars on chain.
Um,
Now, you can then send it to another person down the hall or another, business, whatever. You can send it from your business to another business, and you can will. nominate that wallet to be allow listed. We'll do a little due diligence, which can happen a lot faster than a full KYC KYB process, obviously,
Sure.
and because it's all electronic. And then that person, if they're accepted, you can pay them all with actual dollars from an account. Think of it as a negotiable CD, except
Okay.
for transaction accounts. And if you want that money to come back, if you want it to be wired, we can't wire it to you because we don't know you or we don't know that other party, Jane Smith, let's call that other party, or Jane Smith Inc., whatever it is. And Jane Smith can apply for an account, and if she would like, then we could send her money. But we can't send her money without knowing it. We're just, in that world dealing with the negotiable demand deposit account, negotiable CD.
Yeah.
Um, but Jane Smith or Jane Smith Inc. can then, if she's affiliated with a company, with an exchange or with a liquidity provider that knows her, then she can give the money to them, and they know her, and they can get the amount. They're an account holder with us. Get the account, get the money. We immediately transfer it, and they can immediately, a nanosecond later, send her the money to her live bank account. These are the kind of innovations that I think are going to be critical. This is why I'm so excited. We're the first group to be able to do this. We're the first bank to be able to do this. And I think I'm extraordinarily excited about it because it actually brings deposit token functionality to the stablecoin world from a full reserve bank.
Yeah, yeah, that's fascinating, and that's super exciting for, I think, obviously for Next, but I think for the industry as a whole and where things are going, what the possibilities are. You guys are leading the way, so that's just amazing. Um,
I got to give a shout out to our
yeah,
whole team because they have been working day and night. And if there were, maybe there's a little time off for twilight, but really day and night, and working weekends, and making sure that the final production is right. I mean, just that's the other thing I would say. It's technology first. We were brought up in banking. I was brought up in banking where it was finance first. Now it's really the engineers are so important.
yeah, no, I think that's a great point. Really, that's going to be a lead clip for this one because that leading with the technology and the engineers having much more frontline control, I guess, or initial control is really where we're seeing things going. I think so. This has been awesome. I'm I'm really grateful for your time. You're a busy guy. You guys have a lot of things going on over there, so all exciting. I hope that you'll come back and update us at some point in the future as to what's going on and what you're seeing in the industry. Keep us up to date there. The last thing I ask before we go is where can people find you if they want to learn about Next or if they want to learn or connect with you directly?
Sure. Well, in terms of next, you can follow us on Twitter, N3XTI Inc. On Twitter, you can follow us on LinkedIn, same thing. You can follow me, I'm on LinkedIn as well. I'm pretty easy to find. And uh, we're just, and look, I'm so excited about this. I think this is really, I think Next has will be one of the innovations that people are talking about for a long, long time. So thank you for having me. And
Of course.
oh, and online we're n3xt.io. I should say
Yep.
that. That's our
I was going
website.
to make sure. Yeah.
Yeah, you should check us out n3xt.io. We've got a lot. By the way, we have a huge amount on our website. Really a
Yeah.
huge amount,
I've
including a white paper on
yep.
NDD. So you can even read about it for the engineers and the like. They can read about exactly what we've done.
Yep. No, I love it. I have been trying to devour as much information from your website as possible. So appreciate you putting it all out there. Um, so thanks again for myself, for our community. We really love it. Really enjoy it. For all of you listeners out there, please be sure you follow Next, connect with us. be sure to like and subscribe to the podcast wherever you do get your podcasts. But from now, I'll go ahead and sign off for this chat, and thanks, Scott, again for being such a fantastic guest. I wish we could just keep going all day with this.
Thank
So
you
I
much.
appreciate it, Scott. Take
All
care.
good. Bye bye.